I've known 1,000 traders that treated stock market as a casino. 100 of them have been in the game for more than a year. But 10 of them, merely 10 of them really profited and decided to eventually steer clear of the trading board. But guess what? No one could really make it out. And you may just finish the story by yourself of how could it end up. I give you a tip. Everyone had blown his account and couldn't resist from this gambling scheme that got to them. Today, however, not about gambling, but about toxic products that you may find here and there, that also are licensed by the biggest banks in the world. And I'll tell you how to avoid such type of drainage of your balance account. So I'm very glad you decided to pop in and watch another episode of Blockrevision. So if you have any issue, any case to study, you may just pop it in a chat going live. And in the meanwhile, we are starting up our next broadcast. Alright, economy view is one thing that is kicking over the episode, and let's begin with the monthly change M2. That's the chart that I had brought from Steno Research. This is one of the market analysts that recently prompted this one, that M2 money supply dropped at 1.2% in March, a new all-time record. That's what he said, and that's what exactly may also have a reflection on how the things are going around the world. Recently we had SVB. Right now we have rising problems with the First Republic Bank, and that's the bank that is considering selling off a significant portion of its assets and just to save its assets. All right, and so it may even lead to another drawdowns in account balances within the next few months out of the banks, out of the US banks, but not only US, as we don't know that the situation in the US is or has the reverberations on the economy across Europe and somewhat also at China one. So this mismatch with a recent run on deposit right now leaving many banks in a precarious position. Also with this smaller and medium cap banks earnings falling short, we can find that not only expectations but also those sentiments around those assets are deteriorating. So that doesn't bode well for the whole economy. Right now, that's the key theme of today's episode. The first slide, I will get to a similar one, but related to crypto, in a crypto space. So let's talk about this nascent type of a financial product, that's VIX 1 index. So its aim is to have a chance to bet or predict even the possible volatility of the market within a 24 hours. And CBOE Global Markets has introduced the product, but as it was back with zero DTE, this product that has been a kind of a, with its mechanism, similar to the one VIX1D has brought is bringing losses to many retail traders, accounting for 358,000 according to Bloomberg. Daily losses. Just to not be mistaken, it's not weekly and not monthly for sure. So those zero DTE options have huge leverage. There is a 1 or 0 bet, so you have the opportunity to make a lot of money, but we need to remember that it's double-edged sword, and with the possibility of gaining that money, you may also have a unfortunately risk of losing all of them. So this lottery-like assets leading to large aggregate losses, and with introducing VIX1D index and the possibility of betting for volatility, daily volatility, I would say that in some cases it's much easier to predict that the volatility will increase rather than whether the stock or any other asset will go up and down. But it's definitely something that may bring more volatility to indexes and alongside the stocks that are related to VIX. So I do find you may just have fun with playing this or that, but if you are just pushing yourself into this gambling mode on stock market, you not only start losing yourself, you start losing composure and your system of rules by this emotionally engaged products, but also you're losing the sense and right feeling of what investment is really about. So don't play with fire, all right? Don't risk too much capital if you are about to get into that game. That's a get-rich-quick scheme, and that's very easy to fall for this herd mentality when everyone is trending one-sided bet, is bragging about it in a social media, but in the meanwhile preparing its position for the sell-off and reverting the stake. So jumping on the bandwagon is definitely something I don't really find as the one of the opportunity of making the money on the market. I just I would say find it might be a useful product, but for the professionals, all right? So if you're not such, just better let it off. All right, so that was about it. And right here, we can find that dollar shorts piling up. Mr. Druckenmiller, we do know him by its famous bet against Bank of England back in early 90s with Mr. Soros that brought them to profit billions of dollars. And this time, Druckenmiller, one of the best trader of our times, is betting against US dollar, even at this low valuations. And he says that it takes aim at dollar in sole conviction trade. One area he's comfortable is to show the US dollar currency trends tend to run for 2 or 3 years, and he expects this US dollar drop may bring us lower in valuation, much lower, below 100 points. Right now, after such a strong sell-off, I'm not really encourage anyone to be a copycat of that move. I think we'll have a lot of swings up on the way, and right now just wait for correction, at least for correction in this move. And if we just wanted to maybe watch where this corrective move may end up, I will try to find the possibility with you. So right now on DXY, we can find that we are flattening the chart, and that might be a reason of double bottom formation to form up. I do expect that there is a much higher probability, much higher odds for having the DXY to lose from here rather than rise from here rather than lose. But you always need to decide for yourself. Right now, betting for breaking of this horizontal line at 100 points for me is misunderstanding. But always there is someone that may say that there is more probability of having this drawdown right from here. Right now, however, with such of a defense in both of cases back in February and April, I do expect that we may find US dollar to rise from here. So don't treat the Mr. Druckenmiller bet as the one of the valid that you may take advantage of right now, in my view, of course. All right, so that was around it, dollar shorts. Market outlook. Let's find out what about the indexes. So SPY, or yes, this SPY chart is showing that we are reverting the bullish tendency. Right here, what I do expect is more likely to have this consolidation move up along the year. The consolidation move that will have its range within this 379 and 417. For now, I don't find any type of eventuality of getting out of this zone, especially after such a strong reversal on a very significant volume. So SPY, let's find out this SPX chart. Yes, exactly. Those indexes. So I would say this interpretation of indexes are not making any type of a high odds for having another stronger move upwards. So on a daily chart, we are still overbought, but slightly touching 50 points. So some kind of a reversal might be found right at these levels of 405, especially as we have a support sitting at this level. But there is still a eventuality of having SPY once again dropping below 400s within a few sessions. All right, so it's SPY right now. Let's get back to our slides. And Mr. Warren Buffett used to use the value of US stocks as a share of annualized gross domestic product gauge that right now finds out that the stocks are still expensive. Yes, I do expect that we may correct that the recent move even further, even to the lower levels of where we seen the gauge throughout the late prior decade. So the 150s, 175 might be watched, but with this gauge there's one problem. So it's based on GDP, it's this measurement might be kind of a bedeviled, So it only measures the value of goods and services produced in a country, and neglecting an other full range of economic activity that drives stock market performance. Therefore, it may not provide a complete picture of how the stock market may perform in the future. For the Mr. Buffett, it was a useful indicator for me. Yes, it might be somewhat helpful, but I wouldn't really stick to this, what it says per se, to large extent. In terms of crypto outlook, let's find out. So right here we have a very important topic. We've seen this matrix that showcasing the outflows out of the wallets of many users by hacks and other type of drainage procedures. So investors who held large amounts of Bitcoin and didn't move their coins for years are suddenly showing signs of life, and it's not an outflow reason by it's I don't know, the outlook for the market to slump or any type of calamity that may be brought to the market, but those old wallets that are not moved are being a subject of a crime, and many of hackers that do know how to crack those wallets just merely secured by private key or recovery phrase may have just used any type of crack into those wallets, maybe even by the brute force attack that they are scanning any type of combination of a recovery phrase and trying to implement the one to the attacking wallet. So please don't keep all your assets in a single key or secret phrase for years. Better protect assets with a pin to your hardware wallet and diversify your wallets, so that if one of them will fall for this crime, the others will eventually be secured. And also, always, and once again, always, never store your recovery phrase on a computer or any type of Google Cloud or on any other cloud data center that may have a leak open the way. All right, so it was about security issues. Right now, let's find out what about market movers. So recently, we've seen that Google and Microsoft, one of two giants, has publicized its earnings reports, and both of them has fueled another wave of a possible rebound in a Nasdaq index, where companies closely watched cloud unit. Right now, the Microsoft is profiting much of this products related to cloud computing, whereas Google is still revolving around, starting diving more into this branch. And right now, Microsoft and Google are pretty fine, preventing the sentiment to deteriorate. So if we just look at the raw data earnings calendar just shown for Tuesday, that we are right now for Microsoft at EPS 0.2 consensus EPS higher than the consensus EPS forecast, with a surprise of 10 40% alongside the Alphabet. So also the Visa one was the one of the outstander. So merely those Tuesdays data has brought us into much more positive moods, and the only one outcast was the UBS that lost 40% of expected EPS. So for Wednesday, we have Meta Platforms, Bain Company, American Tower Corporation, and other important groups, CMEs, Waste Management, and on Thursday we have Amazon, Eli Lilly, and MasterCard, among others. So what about economic calendar? Right now, we can find it on Wednesday. We had GfK consumer confidence out of Germany. I need to refresh the site just to watch out whether nothing have happened. So actual has dropped. But we are at a negative territory. So it's a positive at all. JFK consumer confidence is improving, and durable goods out of US also has improved. That's why we can find the better moods on the market. GDP growth rate is yet to be published tomorrow, and that's the one of the forecast at 2.3%. So it might be difficult to keep up, but it is slight deterioration of previous gauges, so it's achievable. So it will be difficult for valuation to watch that. And also Bank of Japan interest rate decision tomorrow as well. So right here we are jumping to trade idea, and I have for you the currency pair. We are not very often reaching the type of assets, as normally I'm not very oftenly just look at the currency pairs, as there are not maybe more remarkable occasions for to trade. But right now, GBP, JPY is the one of the currencies pairs to trade in my view. So if we just turn on the lines right here, we can find that we've been rejecting twice this level of 167, and in my view, it's one of the eventuality that may push us lower, especially that that negation was kind of a strong. We could find that also we have formed a very fresh formation of lower highs, lower lows. So it may justify the data that tomorrow we are expecting Bank of Japan to eventually become more hawkish in its standpoint. So it will be a key event for this pair to play out. But in my view, after such price action to the downside, I find that those market makers already know something we do not know. So in my view, it's a kind of a very lucrative risk-reward ratio trade with a possible objective of even 162. And after such of a rally on GBP, it might be much more difficult for GBP to keep up with its current valuations. We have touched slightly 70 points and right now correcting this recent rally move, and the eventuality may get us to this 200 EMA on a daily. So in my view, those data out of GBP which economy still have some issues may deteriorate along this improving or the strengthening for JPY currency data that may just inflow within any moment out of BOG tomorrow. So right now it's a speculative bet for those that are waiting for confirmation. You may await for tomorrow's tomorrow's event out of BOJ. But for me, it's a clear sign, and that we are right now in a much more difficult territory for JBP, and purely out of the price action manner. So in terms of short position, I do find this position as the one that might be in my interest in terms of the area within which I do expect taking this short position is valid for me as within this exactly box with of a range of 166.33 and 97, and within this box I would find the this type of a bet as one of the valid, and I will cut some of the position upon a way down right here with getting to 664. I will cut possibly 2/3 of a position with a eventuality of holding the position back to 162. So risk reward ratio at that type of a trade is at 2.84, and it's slightly below 3, but I do find that we won't get once again to 167, as this double top formation has already been formed. So we can find there is a breaking of market structure with this lower low being formed right here. We can find that this indecisiveness may point also that right here the fight between the bulls and bears has been undecided, and this preliminary price action may predominantly set the scene for the next few sessions. So that's it in my today's episode. Thank you very much for watching. Tomorrow we'll see each other at the 8:45 a.m. each time. Also, I wanted to show you out that on GBP, JPY trade, there are much more positions for a sell right now than the buy. So we are at the wrong side of a trade in terms of positioning, but I wouldn't really stick to this too much, as many just sold today right after this slump. That's why this positioning gauge looks like that. So JBP, JPY for me is the one that may lose from here. All right, so thank you and see you.